Welcome everyone to a special Halloween edition of State of the Market. Today we're going to talk about some of the most frightening things in the market. I can't talk with this thing. All right, that's better. Well, I'm Mark Lichtenfeld, Chief Income Strategist of the Oxford Club. And by the way, if you haven't subscribed yet to State of the Market, it's absolutely free. So go ahead and click that subscribe button. Well, it is Halloween weekend, and in this video, I'm going to give you the equivalent of the king-size Reese's Peanut Butter Cups instead of a bag of raisins like other people on the internet. I'm going to give you real tactics for how not to be scared of the scariest thing in the market: losses. Losses are scary. When a position is down, the idea of actually taking the loss is terrifying, especially if you're going to have to fess up to a significant other that you had a bad trade or investment. I mean, that always goes well, doesn't it? But that can lead to avoiding taking the loss, in which case it almost always gets even worse. Never hang on to a loser because you have to wait for it to go back up. If you no longer like the stock and the only reason you're still in it is because you're down, then you know what to do. Let me repeat this because so many investors make this mistake. If the only reason you're still in a stock that is down is because you can't or don't want to take the loss, get out now. The loss will get worse, I promise you. Now, taking a loss is hard. I've been in the markets for 30 years and I still hate it. But if you learn to take them quickly when they're small, it's not nearly as bad as when things spiral and the loss gets big. And when you're fretting about taking a loss, selling the position actually gives you some relief. I mean, yes, you took the loss and that stinks, but the emotional toll of worrying about it constantly, it's no longer there. Take the loss. One way you can do that without emotional turmoil is to set a stop loss. You do that when you buy the stock. That way you're not in an emotional state when you're making the decision to sell. You're thinking rationally. You can also raise the stop as the stock climbs so you can protect your profits and not let a winner become a loser. I mean, that's my favorite way of taking emotion out of the decision to exit a position. Another thing you can do is buy a put option. A put is like insurance. If the price of the stock falls, the value of the put should increase. But just like insurance, a put can be expensive. If you're insuring a 19-year-old kid with an expensive sports car, you're going to pay a lot for your insurance premium because that's probably a volatile situation. And if you're buying a put on a volatile stock, you will also pay a lot for your insurance. So be sure that the premium you're paying for the put option is worth the risk you're offsetting. Many times it is, but just be certain that it is. Lastly, use a stock chart to show you where you might be wrong. If you see a stock breaking through an area where it always bounced in the past, that's a strong indication that it is going lower and you should get out. For example, this is a chart of Kaiser Aluminum. You can see that this year, every time the stock dipped to about $103, it rebounded. That $103 area is called support because the stock was supported at that price. But in October, just a few days ago, the stock fell below $103. That's a strong sign that the stock is going to continue to fall, and you should
get out.
Now you can use the other two methods along with the stock chart. You could set a stop below the support level, or you could buy out of the money puts below the support level. Now, not everyone can admit they were wrong.
I was not exactly right.
The charts spell it out in black and white or red and blue or whatever color your charts are, but it makes it very clear that you were not right and you need to
Get out.
Taking a loss isn't as scary as you think it will be. It's not pleasant, but it should no longer be terrifying. Learn to take small losses quickly rather than let them fester and get bigger. If you do, your trading results will improve and you'll be handing out the jumbo-sized candy next Halloween. For more wealth and income building ideas, just click on the link below. Thanks for watching State of the Market. I'm Mark Lichtenfeld.